The ringgit is expected to strengthen further against the US dollar next week, driven by signals from the US Federal Reserve that an interest rate cut may happen in September. We speak to Dr. Muhammad Afzanizam Abdul Rashid from Bank Muamalat Malaysia about the impacts of the highly anticipated Fed's rate cuts on the ringgit.
At the moment, the Fed fund rate stands at 5.5% versus OPR at 3%. That gives about 2.5% advantage on US rates. But because of the anticipation of rate cuts in the US, the gap between those two rates will actually be narrow. That would make Malaysian financial assets become more appealing, especially in the eyes of the foreign investors. So the immediate impact, I would say, the appreciation of ringgit going forward. So of course, the appreciation of ringgit would actually result in a better purchasing power for Malaysians, those who plans to study abroad, those who plans to go overseas vacations, and those who plans to buy more stuff from abroad. Malaysian is expected to have better purchasing power on that note. So I think, the bigger picture, obviously, the appreciation of ringgit also indicates a better confidence level among the investors. And this has been reflected through our equities market. And we saw also in terms of the inflow of funds from abroad, from the foreign investors in our equities market, in our bond market. So the strengthening of ringgit, in a way, suggests is a vote of confidence towards our economic conditions.
As the US is expected to follow the footsteps of its developed markets counterparts, including the Bank of England and Bank of Canada in cutting its interest rates, will Bank Negara Malaysia also follow suit?
In our case, perhaps slightly different in a way, because I think the Bank Negara are paying close attention towards policy changes, especially in respect to subsidy rationalizations. And I think we have seen the rise of diesel prices on the 10th of June by around 1 ringgit and 20 cents, but it only resulted inflation of 2%. So it's still stable in that sense, because simply, diesel only account 0.2% in the consumer price index weighting. But in the case of RON 95, which has yet to be adjusted upwards, it accounts about 5% of total CPI weight. So on that note, any policy changes on subsidies in respect to RON 95 is likely to have a significant impact on our inflation dynamics. And on that note, I think it is quite clear in Bank Negara's inflation projections. They are looking at 2% to 3.5% this year. So it's a 1.5% margins in terms of their forecast range. So it actually reflects the degree of uncertainties as a result of the anticipation of changes in policy. So I think Bank Negara is still worried about the dynamics of our inflation. So I don't think Bank Negara would actually immediately cut their OPR anytime soon at the moment.